Joining us now are Bloomberg Intelligence senior analyst for U.S. banks, Herman Chan, and the editor of Investopedia, Caleb Silver. All right.
Mike Mayo, known weightlifter,
oh my God.
hobbyist.
So it's the fact that he's skipping the gym.
It's a big deal.
Indicates how big this is. Do we
Herman
always
is the second
very muscular
Herman's the
these
second
days.
swollest on Wall Street.
I'll take that. Yes, please. Thank you very much.
This evolves so quickly.
I'm going to Barry's after this.
It's a family show, right?
Perfect. I'm going to take a nap. All right. But you go work out. Do we always get these all at once? And I was reading some analysis from Bloomberg, which I do now, read bank analysis, saying that it's expected to be good but not amazing. Why is that?
Right. So banks typically try to stagger their earnings, but for some reason, for this earnings calendar, there's 5 in one day, and Bank of America and JP Morgan have competing earnings call times at the same time on
that's
Tuesday.
helpful.
So yeah, it's great for us bank analysts trying to listen to 2 earnings calls at the same time. But we're expecting really strong results overall for the banking sector this quarter. The banks have really shrugged off some of these geoeconomic issues and the K-shaped economy that we continue to hear about. There's really strong earnings power, both on the trading side, the investment banking side, and on the lending side. Your typical bread and butter commercial lending is really strong. So about 20% year-over-year growth. So yeah, we're looking for really good results overall.
Okay, let me ask you just about the role that SpaceX is going to play in all of this. So for so many weeks, we were focused on SpaceX's debut on Wall Street. You know that Goldman and Morgan were kind of running that IPO, but I don't think that there was a major firm on Wall Street that wasn't involved somehow. Is that going to be manifest in these results as we see them?
Yeah, everyone has a piece of it, and that's just some of the activity that went on that's going to help their bottom lines. The M&A activity, just the trading activity, which has been pretty robust among institutions, that's going to be good for banks too. I think what we want to hear is how healthy is the consumer? Bank of America, Citi will give us a pretty good window on that as well, but also the net interest margins. We know where interest rates are. We know where they're probably going to be for the next few months. What does that mean for bank profitability? And overall, what is the health of businesses and borrowers?
Herman, what are some of the concerns folks have with these larger banks? I was reading this morning that investors want assurances they can kind of keep this momentum going in light of AI valuations, higher gas prices. And also, we had this big kerfuffle about private credit. Did that not turn? Are we not worried about that anymore? I spent so much time learning about private credit. Was that all for naught?
It's something that's still lingering on the sideline. So it's something that it's a big growth driver. I mentioned the commercial lending growth. The private credit side of things is driving a lot of that. That being said, banks gave really heavy assurances in the prior earnings season that they're very comfortable with their exposure to private credit. They've underwritten it very conservatively, and it would take a lot of decline in the overall market, and you would be more concerned about the overall economy rather than their private credit exposure.
Okay.
So we have that going on. The other risk that we're looking at is really on the deposit side, given the fact that there's expected so much robust lending, that deposit competition has really intensified, so their funding costs would presumably increase, given the fact that we're not really expecting any more interest rate cuts over the back half of this year. That really contrasts the expectation heading into 2026, where there was 2 rate cuts baked in. So there's an evolving interest rate backdrop that could affect banks' net interest margins going forward.
We want to get into Netflix, but before we do that, I have a question for each of you. I'd love for each of you to answer, and that is, we get to hear from these bank executives over a speakerphone on Tuesday and Wednesday, yes, with Morgan. But Caleb, what do you take away from that? I mean, what are you listening for when you hear these executives talk? Do you appreciate kind of their vantage, their perspective on geopolitics broadly? Do you want to hear more granular information about the banks? What do you want to hear from these executives on Tuesday?
Yeah, some CEOs are more candid than others. Jamie Dimon among them.
Notoriously candid.
And he will tell you exactly what he thinks and exactly how the bank sees things. I heard him at the Reagan Economic Forum a few weeks ago, super candid, but also saying America needs to be strong defensively. We also need to make sure we are taking care of our people. So he cares about both of those things. There's also rumblings about the succession plan at JP Morgan. I don't think we're going to hear anything about that this week. He's still got some time in the seat. So he's a little bit more candid. But again, we want to know how strong are their customers? How robust is the lending going to be, as Herman mentioned? But also, how strong is the U.S. economy, especially when it comes to consumers and their spending?
Herman, how about you? What are you listening for?
Yes. so that's right. Jamie Dimon's always been sort of the spokesperson for the industry. We'd love to hear more about the evolving backdrop, given the fact that we still have geopolitical tensions, where the economy is going forward, and then the succession issue. Marianne Lake recently stepped away from the bank, and there's 2 new co-presidents. And then really the eyes are on Troy Vorbaugh, who is going to lead the consumer operations going forward. Is he viewed as the heir apparent in Jamie Dimon's minds? I'm sure a lot of analysts will probe that thought.
Just to interject quickly here, I mean, this is like the longest running parlor game on Wall Street right now. When is Jamie Dimon going to step down? And does this latest move give you any indication of how much closer we are to that point? I mean, he is often asked about this, Jamie Dimon, and he is very quick to demur and say how much he loves his job.
Right. I would assume that we'll have more of that same refrain, where he's going to say he's in it for the next foreseeable future. That being said, succession planning is something that the board and the bank takes very seriously, and I think the 2 co-presidents really speaks to that.
All right, Caleb, I do want to get to Netflix.
Yes,
it's usually the start of tech earnings seasons. How is Netflix doing? Because as a consumer, I feel like they're having a bit of an identity crisis, right? When I think of like really prestige streaming, I don't think of them. When I think of like the CSI audience that my parents watched, I don't really think of them either. I don't really know what their brand is, and I wonder if that's part of the problem, is they're struggling to maintain consumers, to stop churn, and to come out where investors want them to be.
Yeah, things have been anything but chill with Netflix and its investors. The
well done.
Stock
well
is
done.
down 20% year to date, down 40% over the past year. Not magnificent by any means anymore, but it is changing the way it runs its programming. It's got some challenges in that it's got competition, but it also has introduced that advertising platform. How much is that growing? They're expecting some $3 billion from that. That costs about, I think, $8 or $9 if you want the ad tier program. They're able to raise prices. They have that pricing elasticity. They're able to raise prices pretty much $1 every year and not much churn, probably the lowest among the streamers. And now they're introducing a lot of short-form programming. They're no longer really just a streamer. They are a global media platform, and they're trying to compete with YouTube.
But do you feel like they have enough of a strategy, or do you feel like they're just throwing things at the wall at this point?
Well, over the last couple of weeks, we've learned more about that strategy. They've started short-form programming. They started a bunch of deals with very popular podcasters. The Bill Simmons Ringer universe is in there as well. Hot Ones is there as well. They signed some chefs to do some short-form content. So they want to make sure they are not losing viewers who want that shorter form snackable content, and they're still building their library. They have a big slate coming out, including Narnia coming out later this year, and a bunch of other big ticket movies. So they're trying to be everything, spending a lot of money doing it.
I want to ask you about their strategy toward acquisitions. So it wasn't long ago they were making a go for Warner Brothers Discovery. Of course, that fell apart. We now see the spin-off of NBC Universal and Comcast. I mean, they didn't make a play for Roku. I mean, how do you see their interest in expanding the business through mergers and acquisitions, if at all? I mean, once that deal fell through, I think there was some relief among many shareholders. What did it say to you about their kind of longer-term trajectory?
Well, the good news is that Netflix executives give long video interviews every earnings report. So I listened to it again last night from the last quarter. They said it didn't work out, but they learned a lot about M&A and how disciplined they want to be and what matters to them when it comes to making big investments. They have a lot of cash on hand right now, and they need to do something beyond adding these creatives and adding this short-form programming. I wouldn't be surprised to see an acquisition in the second half of this year or early next year, because investors want to see really what's next beyond short YouTube clips and adding podcasting to the platform.
Herman, to bring it back where we started, when we get these earnings reports, we usually get a macro look. When you go through them, when we get big bank day and none of us are working out and we're all on these calls, and by we, I definitely mean you guys, what are you going to be looking for? Anything specific that we should be watching for that I can steal later in the weekend to make it sound like I'm smart?
Right. So a lot of it's going to be what they say about the economy, right? Heading into this quarter, there's a lot of enthusiasm into the earnings, but one of the pieces of that enthusiasm is that the credit quality performance of the banks will be very stable. How that really shapes up going forward, a lot of the analysts will probe about that, given the fact that there is still a lot of risk. Energy prices are still high. You've had companies talk about consumers pulling back in certain areas of discretionary spending because of the high energy prices. How does that flow through into the banks in terms of customers and consumers paying back their credit cards and their mortgage? So we'll be looking forward to that.
Last question to you, Herman, picking up on what Caleb was saying a moment ago. We were talking about prospect for mergers and acquisitions. We've had the SpaceX IPO. SK Hynix had its listing on NASDAQ on Friday. Both of those are seen as kind of litmuses for how the market would be for offerings.
Right.
What's your sense of the verdict on that? I mean, there are a lot of companies here waiting in the pipeline.
Yeah, I think that's one of the areas of enthusiasm for the banks in particular, where banks are playing the AI and infrastructure side of things through their equity offerings, through their capital markets businesses, in debt underwriting, in bonds, in securitizations, CMBS. So these data center financing that needs to happen and the CapEx that needs to be spent to build out the data centers, the banks are playing that by helping these companies with raising money. So the AI theme is a big part of the capital market story, and we'd expect more commentary on that in the second quarter as well.